Should you invest in the Motilal Oswal multi-asset fund NFO? There's a new NFO from Motilal Oswal, and this is an asset allocation fund. The NFO is open till July 27th. The fund basically invests in 4 asset classes, which is Indian equities, international equities, gold, and debt markets as well. So first and foremost, let us see how the allocation works. In equities, that is both Indian and international equities, the minimum allocation would be 10% and the maximum allocation would be 50%. In debt instruments, the allocation would range between 40 and 80%, and in gold, the allocation would be between 10 and 20%. Now, when we talk about the allocations, as far as equity is concerned, that is Indian equity is concerned, the fund would essentially follow a large cap bias and have more of large cap stocks. As far as bonds are concerned, the funds would look to invest in medium term bonds of the highest rating, typically PSU bonds, AAA rated corporate bonds. Gold will be invested through a gold ETF, and as far as international equities are concerned, they would be investing it in the Motilal Oswal S&P 500 ETF. As I mentioned, it's an asset allocation fund, which means that the allocations will be changed on a regular basis between the asset classes. Now, they're going to be using their own proprietary index, which is the Motilal Oswal Value Index. This index is actually calculated by NSE for them. It is calculated taking into account the price earnings ratio, the price by book value, and dividend yield of the Nifty 50 index. And this index is calculated on the 30-day moving average of the above parameters. What this means is that a low index means that the market valuation is cheap and hence there'll be higher allocation to equity, and a higher number on the index means that the markets are expensive and there would be a lower allocation into equity. The fund follows debt taxation and will have 4 different fund managers. So should you choose this fund? Well, my opinion is that if you really don't know what to do and you really find it very difficult to decide how much to allocate among different asset classes, then this is a great fund to invest in because it's investing in all the 4 asset classes. It's also doing a regular rebalancing for you. So you don't have to worry, is it a good time to exit, or, are the markets going to go up further? Right now, for example, so many people are talking about gold being at 50,000, whether it's a good time to enter and stuff like that. They have a model that will help them decide whether they should invest and how much they should invest in a particular asset class or not. But for those of you who are already investing in various funds and are following an asset allocation strategy, I do not think that adding this fund is really going to create much value to your portfolio. One of the other points that you need to note is that the fund follows a debt taxation since it does not have more than 65% invested in equities, and hence you need to be cognizant of the fact that if you do invest for a very short-term period, which is less than 3 years, then the returns are going to be taxed as per your tax slab. As such, we do recommend any investment which has equities in it, and this fund does have a sizable allocation to equities, should be held for more than 7 years. So if you're going to hold it for a long term, which is more than 7 to 10 years, then in any case, the debt taxation is really not an issue because you will benefit with the 20% plus indexation capital gains benefit that's available on debt-oriented funds. That's it, folks. So you decide based on whether you're doing your allocations on your own, or you would prefer that just leave it to them to do it and I don't have to take care of it. If you're on that side, then this fund will certainly work for you. If not, continue with your current asset allocation. Cheers.